Good morning and welcome to the Trading.com weekly market update. And with me again is Peter Maguire. Good morning, Peter.
Good morning, Andrew.
Okay, start domestically this week. The Melbourne Institute put out their consumer price expectations, which is just shy of 5%, which is a big number.
It's horrific. When you look at that, that is really, that worries me. And over to you, but I mean 4.8%, Andrew, is not where anyone calling a rate cut for Christmas, tell them they're dreaming.
Yeah, now once again, that is only an expectation. That's not the official CPI figure. But then again, the CPI figure, even though it is not that high, it has been quite sticky in Australia. And I know we've just had a rate cut. The RBA has been very cautious for a long period of time now.
We've had 3 cuts this year.
But you sort of think, will they get another one? I know there's a huge amount of pressure from the consumer.
Oh, absolutely.
To a certain extent from the government as well about bringing rates down. But
absolutely. They're
certainly keeping their independence about holding the line.
Well, yes, and I would think that from looking at that, Easter would we need to see a dramatic pullback and softening from an inflation stance leading into Easter, and you might get one then. But hey, all I know is it's 2 to 3%, and if Melbourne Institute, I reckon they'd have a few PhDs that would know a little bit more than possibly ourselves, for sure, as far as the numbers.
Yeah. The Aussie dollar is around that 65 handle at the moment. It's come off a bit, once again, probably more so on the strength of the dollar index.
You bet. 99, the US dollar index had a nice bounce, and that it's been really dynamic market to trade over the last probably 3 to 4 weeks. The Aussie had plenty of opportunity to pick up 1.5, 2 cent moves, which are pretty robust. And I think that volatility, considering where we are with the US dollar picture, we might see that continue over the short run.
Yeah, and just looking at the dollar index, it's now above its 50 and 100-day moving average, which it hasn't been for quite some time, touching on that 99 handle, particularly on the back of Trump last week.
Friday.
And China and the equity markets had a pretty huge sell-off.
Yeah, 3.56% down for the Nasdaq on Friday, 2.71 for the S&P, and just under 2% for the Dow. That, Andrew, was really that's nearly parabolic. We were at 95.8 was the low, and then it languished there. It went range bound, and it had a little bit of a bump, as we know, to 97. Then it sold off again, and now it's that 99. It's 99 in Asia today, 99.00. So I think 100's got to be a target.
You would think so in the short term, for sure.
Yep.
Okay, looking at rates, we keep an eye on this each week. Now, the 10s have come down about 10 basis points from last week on the back of that volatility last week. Yeah,
given they've a little bit further uptick in Asia trade this morning. They were at 403 on Sunday. I spoke to Bloomberg yesterday and it was at 403. That 2-year was just on 3.5. So I think that you're going to see, again, a little bit of further heat coming back into it because of those impacts from I think a risk perspective from President Trump. 100% as the tariff announcement increase. And what really shone in my eyes was the VIX. The VIX was up nearly 32% on Friday. I mean, that's an enormous move, Andrew.
Yeah, huge. And it had been pretty steady for quite some time.
Yeah, running 14s, 15s, 16s, it bounced to 22. So that's one thing that I think all traders need to be conscious of, that S&P 500 volatility index around the options.
Yeah, for sure. Talking about, well, not volatility, but momentum, gold and silver.
Yeah. Gold, 4,000 on Sunday, 4,065 now. So that's just in early morning, Monday morning in Asia. Silver's had a nice bounce up. It's up $1, 99.5 cents up. So the way silver's going, Andrew, I think it's got 50 written all over it for this week. And gold, at 4,064, man, if that's up $65 this morning in a couple of hours, obviously 4,100's got to be in the radar.
Oh, you would think so. But the way we've been speaking the last few weeks as well, like going up another $100 is sort of nothing really.
No. I think 42.50 from a technical standpoint has got to be a handle that everyone looks at and looks at with a lot of interest. If it breaks 42.50, then possibly 45, 46 by year end. But it's just as you said when you started talking about this, the momentum is incredible.
Yeah, it certainly is. Finally, a chart here comparing the .com bubble and how internet pretty much started off back in the sort of late 1990s. Comparing that to what we're seeing on the tech stocks these days. Now, there's a pretty strong correlation there, but I think that the key difference here is for those of us old enough.
I wasn't, Andrew. You tell me you were, but no, I'm not that century, unfortunately.
All right, well, I'll fill you in.
Please do.
So the late 1990s, early 2000s, there was a ton of IPOs, internet companies, they were just dropping like flies. But the reality is very few of them, well, they weren't profitable, and hardly any had revenue.
That's right. It was a wish and a prayer.
It certainly was. Very different these days. Some of these companies involved in the AI just...
I've got $4 trillion market capitalisation, NVIDIA, Amazon. I mean, it's just...
And free cash flow totals just out of this world sort of thing. So you can sort of say, is it a bubble? Probably not at the moment. We don't have that IPO frenzy at the moment as well either. So, but, it can't go up forever.
No, there is an inflection point, certainly, but I think the fundamentals are far different these days versus then. But again, it's the implementation of the AI concept and how it embeds into society, and that's what the future earnings are all about. That's just a layman looking at the sense of purpose. I think one of the major issues is there any chance it could derail?
I think it might be, I don't think it will derail, but it's just the amount of money going into it to set up all that infrastructure, the data centers and all that sort of thing. When can they monetize all that and actually make a profit on it?
Well, that's what I mean from a derail standpoint.
And I think...
It could soak up $500 billion or $2 trillion of CapEx, and we've paid the money, and all of a sudden... It's a sunk cost.
Yeah, and you may not get your return on that. Could come in 5 years' time, sort of thing.
Or 25.
But obviously AI is here to stay. How it gets incorporated into everything is yet to be seen. But bubble probably not at the moment. And in these hot equity markets, a lot of people saying they're very toppy, but they can stay toppy for
a hell of a long time,
many months, or even longer, which we've seen. Throughout history.
Well, they've been very toppy, if you're looking really, going back the last 3 years. They've just continued to grind higher, and now that S&P is just, 7,000 on everyone's forecast. And can it be there by Easter next year? The momentum, the way it rallied through 6,000 with such conviction, I thought, 6,000 will pull it up. Now it's like 6,600 and it's motoring, it's getting stronger.
Yeah, it'll be interesting to see if there is a major pullback. We obviously saw a decent sort of pullback on Friday, but if we get a 10 to 20% pullback, what will be the catalyst to bring that on? But what we've seen with that in the past as well, when it does drop off that amount, the buyers just start lining up again. Now, could that catalyst be the Supreme Court ruling in the US about the tariffs? Who knows? Like if they come out and say, no, it's all illegal and you've got to pay it back, well, the bond market's not going to be happy there.
No.
And that could be
the catalyst.
It could be. In fact, I think it would be. That would be, you'd get a major sell-off on the back of that. So, but once again, we'd have to wait for that decision. But time will tell. This week, we've still got the government shutdown.
Yeah.
We don't have many stats coming out of the US at the moment, purely because they're not working.
Well, exactly, and there's talk of hundreds of thousands of jobs being furloughed, and there's no talk at all. I mean, we spoke last week about Chuck Schumer coming to the party. He's not coming to any party right now, and that seems to be even further pushback. So are we up to, end of month?
Yeah, who knows?
Well, it doesn't seem anything on the 13th. There's no talk. There's nothing.
No, so that's what I mean. It's all sort
you
of
would expect
silent.
it. You would expect it to take at least a week to say, right, we're going to work on this and we've got a deal and we're going to be together next week. There's none of that communication.
No, so.
So I think 1st of November is a wish at the moment.
Yeah, which is still that's a few weeks away. And I think that was the longest shutdown. I think was it 34 days,
35 days,
or whatever it was.
In 2018. I think.
But anyway. But we'll keep an eye on that and touch base again next week.
Look forward to it, Andrew.
Great, thanks, Pete. And that's the trading.com weekly market update.